Hello everyone, good morning and welcome to today's Morning Report on Tuesday the 26th of April with me, Richard Perry, market analyst at Hantec Markets. We've got a reasonably positive start to the open actually, pretty decent bounce actually, despite the fact that we had a fairly drab trading session on Wall Street and also Asian markets, but we've seen a bit of a turnaround in risk sentiment. There's been a bit of a correction on the dollar overnight and into the European session. And that's interesting because it sort of has been driven by the big rebound actually in the last couple of weeks, and sort of growing strength on sterling, which is a broken sterling higher. Sort of the expectations of a Brexit seem to be reducing, and that is certainly helping to support sterling. Now, the Fed starts its two-day meeting today, and he's going to get the FOMC announcement tomorrow night. In front of that, interestingly enough, look at the two-year Treasury yield. It has been strongly pushing higher, which I sort of mentioned in my morning report. Generally, that tends to sort of coincide with an increase or a strengthening in the dollar. Now, until sort of yesterday and today, the dollar had been looking to sort of improve, but it started to pull back lower again, and that's sort of come with not only that sterling strengthening but also the yen strengthening as well. The yen was had a sharp move lower on Thursday, which coincided with this candle here, as expectations of on Friday, as expectations of possible action by the BOJ, further extension of negative rates. BOJ meeting is also this week, so a fair couple of sort of risk factors to weigh into sort of sentiment here as the week goes on. So the markets are sort of positioning ahead of these two key central bank meetings, and it's certainly having an impact on the dollar as things stand. So what we are seeing is positive moves on equity markets, the dollar slightly lower, and also interestingly enough, we're seeing consolidation now on gold and silver as these commodities consolidate. Oil is slightly higher today, and that's helping a little bit of sentiment on the markets as well, but nothing too significant in terms of the moves on commodities today. Now, in terms of the economic data, we're sort of fairly quiet in the European session, but we then sort of look towards the US session, whereby we have four bits of data actually today. We've got, first of all, starting with the durable goods orders at 1:30. It's expected to come in at plus 0.5% on the month-on-month for the core data. So that's obviously higher than last month, which was minus 1%. And then we're looking towards a bit of housing data. The S&P Case-Shiller housing price index is at 2 o'clock and expected to actually come down to 5.5%, which would be a 4-month low on that. So just, is that rolling over? Not quite sure yet. I don't think that's enough to make a trend, but that would be a slight disappointment, I think you can say. And some of the housing data that we've had in the last couple of weeks has not been all that great. And then we're looking out for the 3 o'clock data, which is where we have the Richmond Fed Manufacturing Index, which is incredibly high last month at 22, expected to come in again pretty positive at 11. So once more, that would be considerably above zero, which is certainly positive for the Richmond Fed region. And finally, consumer confidence. The Conference Board's consumer confidence number 96.0. So basically, sort of continuing the sort of sideways move. Nothing too significant in terms of trend in the last year or so on consumer confidence. So 96.0. So a fair bit of US data to move markets this afternoon. But it's interesting because we have got this dollar weakening, and that sort of ties into my chart today, which is the Aussie dollar. Now, in the Aussie dollar, we had the... Sorry, let me just get that going. Sorry. We had got this bearish divergence still in play, actually, on the Aussie dollar, and that comes across on both on RSI, MACD lines, and also the stochastics to a certain extent turning lower. Now, I think this is very interesting because you're beginning to get the negative sort of signals starting to come through here. You had a bearish outside day, or bearish key one day reversal, bearish engulfing pattern, whatever you want to call it, on 21st, which was Thursday last week. And then that was certainly confirmed on Friday. which with another negative candle. That bearish engulfing pattern is a new high followed by a close below the previous day's low. That is certainly a negative sort of swing on the sentiment there. You've had a slightly sort of positive candle yesterday, again sort of adding to today's positive move, whereby sort of the Aussie is now, as the Europeans have come in, around about 30 ticks high. It was about flat when I was looking at this earlier, maybe slightly lower, but it's actually come in slightly higher as the Europeans have come in. Now the question being, is this sort of playing out as another move that's going to see it a push to new high ground, or is it going to be sort of moving out towards a second lower high? Now this is the, sorry, that's not Aussie. Sorry, that is annoying. So here we go. Had this sort of rolling over of the trend. Now, are we seeing another lower high? Because you've got this resistance in at 77.75, which was the first lower high potentially, which again is sort of around about a sort of pivot level with these lows in that band of middle of last week. So hitting that high 77.75. So if we see another lower high underneath 77.75, I think that would be a fairly sort of possibly indicative of what we're going to see as a correction. Now that means that the support at of the lows at around 76.90 of Friday and Monday become important. Now yesterday was Anzac Day, so there was reduced trading on the Aussie, so that subsequently the Aussie basically went nowhere yesterday, and that sort of played into that candle that we saw yesterday, which was fairly nondescript. But today we've had a reaction higher, but can it continue to move higher and break through 77.75? Now this could be turning out to be a bit of a slow burner. It's certainly possible, because bearish divergences can go on for a while on momentum indicators, but I just think that there is a loss of momentum, or beginning to lose momentum on the upside. And you're getting this, the corrective signals are coming through. You've got that sort of sell signal on the stochastics, you've got the bearish engulfing pattern, so it's just beginning to sort of come come up against some selling pressure or some negative pressure. So I would just start to think about this when you're sort of playing on the long side. Just be very careful that there are the negative signals that are starting to come through. We haven't had the sort of breakdown signal yet. Certainly the breakdown signal will probably come on actually a move below 75.90. As I said, that support there, 75.90, would be the breakdown signal, I think. But for now, we're still sort of trading in these sort of sequence on the daily chart of higher highs and higher lows. However, just bear in mind that we have still got this bearish divergence on the momentum indicators. So I wish you good luck in your trading on the Aussie today, and I will speak to you later. Thank you.